Hey guys, my name is Alam. So today we have Bitcoinomics, and this is something that I started as far as just educating people on Bitcoin and its impact on the global economy. I'm Alam, so go ahead and get this started. Just a little bit about me. Obviously, at this point, I'm just some random guy that showed up, and he's probably a Bitcoin fanatic, so you have no idea who I am. Nikki just met me during NYC Tech Week, so yeah, just some random news. So a couple of things about me. A couple of pictures. There's my family, not pictures. Yeah, we got recently. There's me in Bali. There's me at the Vegas Bitcoin conference, and then also just me, my picture of Tokyo. And yes, I do like to surf. That's me in Bali right there. Yeah, so just a little bit about me as far as that goes. Obviously, as you can tell, I like to travel. As far as professional background goes, so got an engineering degree from Virginia Tech many years ago. So worked as an engineer for several years. After that, jumped into solar, so renewables, and a little bit of sales, and then pivoted into tech. So looking at more AI, data science, which falls under AI, Hyperloop, computer programming, etc. So everything that I've really done as far as professionally goes, I've always wanted to make sure that, well, first and foremost, I enjoy. I hope that's why people would be doing what they're doing or have the ability to. And so as far as if it had any sort of big impact. So engineering was energy efficiency, so sustainability. I like to save energy for the companies. Companies were more probably worried about saving their pocket. And then as far as renewables goes, sustainability for solar. So that was big for me. And then as far as tech, tech is everywhere. We're utilizing our computers right now, iPhones. Tech impacts our day-to-day. So that's the reason I wanted to get into it. So yeah. And now around the same time I got into Bitcoin. So why did I really get into Bitcoin? It was around 2017. I really started researching Bitcoin a lot as at the end of 2017. So that was during that hype cycle, if you want to call it, where Bitcoin went up to about 20K. So me and all my friends were buying Bitcoin, we're buying Ethereum, we're buying ARK, you name it, we're buying it because we think this is the next thing along with many other people. What happened? 2018, Bitcoin dropped down to $3,000. So at that point, all my friends are out. They're looking at me like, I don't really know why you're still in this, but for some reason, I'm pretty contrarian when it comes to certain things like this. I was like, yeah, why am I interested in Bitcoin? So it forced me to do a lot more research into it. So investor for over 7+ years, and then I've done a gamut of things: day trading, swing trading, margin trading, and then the easiest one was definitely DCAing, so dollar cost averaging. But in this case, it's Bitcoin cost averaging. We're just replacing that here. And we'll get into it later. As far as investing goes in Bitcoin, we'll talk about that later. That is the easiest one by and large. If you have the stomach to take margin trading, more power to you. And day trading, good luck. I do a little bit of margin trading. Day trading are not exactly within my cards. But again, I've tried all this. And this year and the next coming years, what I'm really focusing on is just building more Bitcoin products. So participated in a couple of hackathons. And so one proof of concept we had was, yeah, there you go, was BitLoan. So that's basically a Bitcoin loaning program. Again, just more in depth. And then Cash Your Click was another one where essentially you just hide your Bitcoin within a picture. You send the picture to somebody, they retrieve it, and they retrieve their Bitcoin. So just a cool proof of concept. We did get it out to dev. And then I talked to a couple of Bitcoin artists. Yes, there are Bitcoin artists out there. If you went to Bitcoin Vegas, you would see a lot of things you never think you would see. Yeah, that's honestly the one thing I'll say about Bitcoin conferences. It's that's literally where right and left meet at that point as far as political views. I just remember looking at it, this is insane, but cool place to be. So that's a little bit about me. So what I want you to get out of this presentation is 3 things. So what is Bitcoin? So if you don't know what it is, hopefully by the end of it, you have a better understanding of it, at least a little bit. Bitcoin's impact on the global economy. So the main topic of this, why does it really matter? So you know what Bitcoin is, cool, it's a cool technology, but why do you care about it? And how does it impact your day-to-day? And then finally, Bitcoin as investment. Yes, I could go to you and tell you, yeah, Bitcoin, you should invest in but why should you? Why do you make your initial investments anyways, whether it's within your 401k, your Roth IRA, whatever it is? And so we'll talk about that, and then we'll answer any questions. Great. So let's start off with, well, first off, what is cryptocurrency? So you hear a lot of things. We're talking about meme coins. We're talking about Dogecoin. That's all cryptocurrencies. That's just a digital currency. That's all it is. That's the simplest way to put it. You obviously see transactions, decentralization, blockchain, data, NFTs, all that. All cryptocurrencies are just digital currencies. That's it. But now the question is, well, what is Bitcoin? Well, Bitcoin is the first cryptocurrency. And so as far as that goes, well, who created it? I don't know. No one knows. Their name is Satoshi Nakamoto, maybe an alien. I literally don't know. Nobody knows in the world. So they created the Bitcoin white paper, released in October 31st, 2008. And in 2009, that's when the Bitcoin network started up. They released it to a team of developers, and then from there it just grew. So now it's maintained by a worldwide network of developers, completely open source. So you can go on github.com, go to Bitcoin Core, and actually contribute yourself. I get emails from Bitcoin Core every day. There's a famous developer named Jameson Lopp, and they're talking about quantum computing, because everyone's worried about, like quantum computing, what's it going to do? What will it do to the Bitcoin network? I'll tell you this much: if quantum computing succeeds and people aren't ready for it, it's going to collapse a lot of things. So right now, a lot of industries are looking into, okay, like what can we do about it, including Bitcoin. Okay, so what is it? I mean, it just utilizes blockchain technology. I'm sure you guys have heard that a ton. And I'm sure you guys question, like, what is that? It's just a public ledger. That's all it is. And all your transactions are recorded on the blockchain. That's the simplest way to put it, really. As far as who runs Bitcoin, it's literally ran by computers like that one, like the ones you guys have around the world. Each computer is essentially called a node, and a node is just running the entire blockchain. So what it essentially does is it has an entire copy of the entire blockchain, entire ledger. And what it will do is, let's say that after this presentation, I did such a good job, Mr. Jarcoin, right? He wants to send me 1 Bitcoin. If you do, I'm just kidding. And so when you send it to me, that'll be recorded on the public ledger. That is the blockchain. That is the Bitcoin network. And so that will go to a computer like this and many other computers, and they'll validate, hey, does it have a digital signature? Meaning, just like your check, you sign your check before you deposit it. Did this individual actually sign it? And did he send it to me? And so after that, it'll look at, okay, does his account actually have enough money in it? Okay, that's good. Did he already spend this amount of Bitcoin? Because that's the double spend at that point. So it'll check all that. Once that's all checked, it's like we're good to go on that end.
And it's essentially anonymous, right?
It is pseudo-anonymous.
Right.
Pseudo-anonymous.
Right.
Because there's a public address, and technically with that, like if you trace it enough, like you trace it right, but pseudo-anonymous, yes.
Unless you put it in the pool.
Sorry?
Unless you put it into a pool and use pools.
Unless you put it into a pool and use what?
Bitcoin pools.
Oh,
Yeah.
Right. That is true. That's a good point. So, and then how is Bitcoin mined? So going into that, so actually all these are actually sent into a mempool at that point. And so once that's sent in, all these other nodes, so you have these miner nodes, 2 types of nodes here. So you have computers and then you have miner nodes. And so these miners will pull in these transactions, and their incentive is essentially to mine a Bitcoin. Why do they care about that? Because they're actually rewarded Bitcoin. Right now, they're rewarded 3 Bitcoin. So essentially what they do is they solve a cryptographic hash, basically mathematical equation. First miner to do it, or first like supercomputer, call it that. So you have a computer, supercomputer to do it. They are rewarded Bitcoin, essentially. And then those transactions go into a block. And so they can say, hey, like my block is the essentially historical piece of the blockchain at this point. It's connected to the rest of the blockchain, and then everyone has to download that piece. And so everyone has the same copy of history of the blockchain and of all the transactions. So essentially miners are rewarded to mine Bitcoin to keep up with security and verifications. They're given Bitcoin, and then new Bitcoin is released into the ecosystem, essentially.
There's a finite amount, right, of Bitcoin?
There's a finite amount. There's 21 billion, correct.
So how far are we?
We're at around a little past 19 million. So 19 million something. I don't remember the exact number, but yeah, a little past 19 million.
At
Yes.
the beginning, it was easy to mine Bitcoin, and now it gets harder because the calculations get more complex. Is that correct?
I don't know if they get more complex. It is becoming harder because there's so many other miners out there. I'd have to get back to you on that one. It is becoming more. I mean, the block size is reducing, or sorry, the reward size is reducing. So it was at 6 before this, so 6 Bitcoin. Now it's at 3. They'll keep reducing that. So where is your Bitcoin stored? It's stored in your wallet. So just like you store your credit card and your cash in your wallet, that's where your Bitcoin is. How do you have access to your wallet? So one way really, you have your public address. So like we talked about, public address is what you send, like your email address to somebody, hey, like send an email here. And then you have your private keys, which is essentially your password. So you don't want to give your password, your private keys to anybody. That's only to yourself. You do have a recovery phrase that's about 12 or 24 letter C recovery phrase. So let's say that you lose your private keys. If you have that recovery phrase, kind of like when you go to your email, you put forgot password, that's what that is, essentially. Now, if you lose your recovery phrase, that's, well, I don't really not help you there. So just don't lose that. Your keys, your wallet, or your Bitcoin, essentially. That's the entire point of Bitcoin. You own it. You're not giving it to a bank necessarily. And we'll get into more of that with like exchanges and whatnot. This is all of yours. Yes.
So explain the difference between a hot and cold wallet.
Yeah, absolutely. So we'll go into hot wallet. Something like, let's say you put it on an exchange, such as Gemini, Coinbase, or one of those. I know those technologies, they say, hey, like we put it in cold storage or whatnot. But essentially, if you're transacting, a hot wallet is just connected to the internet. That's all it is. A hot wallet is more susceptible to hacks because they hack. I mean, hackers are everywhere, hacking everything, not just the Bitcoin network and Coinbase and everything, hacking banks and whatnot. Hackers are everywhere. So as long as it's connected to the network, that's really it. That's what a hot wallet is, connected to the internet. Cold storage is something like a USB drive, where something like a Ledger or a Trezor, where all your private keys are stored, but it's a USB drive. So unless it's connected to your computer, it's never online. And the only time it'll actually be connected online is when you're actually sending and receiving, or sending.
And you can still manage like your cold wallet on like a Ledger website.
That is correct.
But it's technically stored on your device.
Yeah, so basically Ledger has their apps and then their apps, whether it's, I use the Ledger mobile app, but that's just an explorer. That's just a window into your wallet. You can't transact without your actual Ledger, but yes, that is correct.
I use Ledger too.
Oh, nice. Oh, okay, yeah.
So would you say, in simple terms, a cold wallet is ideal for just looking at it as an investment? I want to buy Bitcoin and I just want to hold on to it, as opposed to a hot wallet, where maybe I want to use it as a currency. I want to have it part of what I'm paying for services for, or whatever. Is that a good way to think about it, or is that?
You can. I mean, obviously, you can get a plethora of different answers. The Bitcoin maxis will crucify you at the cross. If you ever said that. However, my personal opinion is, yeah. I mean, if you're doing daily transactions, I don't want to be going to my hardware wallet every time. I just want to be able to transact very quickly because that's just easy use. As far as
a bank, right? So you have money in the bank, would be your hot wallet, and you have cash at home under your mattress. That'd be a cold wallet.
There you go. Cash on home under your mattress.
Any app where you hold your crypto on your phone, kind of like where you have your wallet with you at all times, that's your hot wallet, where you have immediate access to it. You don't need to go into storage, go to the bank or whatever, withdraw. It's right there. It's with you at all times. It's like your wallet that's on your